everyone, welcome back to my channel, Building DeFi Income. Today we've got a bit of a different sort of style of video compared to the last few. Previously we've sort of broken down different protocols and stuff. Today is going to be a bit more of like I guess something I might call like a monthly check-in on my portfolio, basically where I'll sort of go through and show you guys how I'm doing, what's been happening generally in the crypto market, what are the general crypto insights like that maybe has affected the different protocols, how's it affected them really will be quite good to touch upon, I think. So yeah, hopefully this will be quite educational, but give a good opportunity for you guys to see how I'm currently doing, so you can, got that sort of evidence of what's going on. But also just to understand generally, do like a bit of a check-in on the protocols and see how they're faring in the current market. Yeah, a bit of a different one, probably shorter than the previous ones, but hopefully still really interesting. So let's get right to the video. Okay, so into the main video now. Before we get started, I thought it might be good to, I guess, just do a bit of a discussion on what's been happening with the general crypto market recently. So since the last video I've made, which probably has been about 10 or 11 days ago now, that was recorded, Ethereum has gone down in price quite significantly. Nothing to be alarmed about, I'll explain why. But essentially, yeah, the price has gone down, which obviously is understandable in a bear market. It does happen. There are peaks and troughs, particularly when there's institutional money involved. A strategy that some big holders will do is they will essentially dump what they hold of an asset that isn't not just Ethereum, but any crypto asset. And then when that price goes down, they'll then buy it back for less and essentially take advantage of the profits. Obviously, I can't say for sure that's what's happened here. So none of this is financial advice, but just based on my understanding and also some of the communities I'm around and part of, that's the general understanding of what could be the reason behind it. But also just generally, if you look at the fear and greed index of crypto at the moment, which for anyone who doesn't know, the fear and greed index is like a rating from 0 to 100. 100 would be really high on the greed scale. Everyone's getting into crypto. Everyone's really interested. And then like 0 is obviously really low, which means basically no one's interested. We're at around, I think, the 20 mark I looked the other day. It may be slightly lower than that now. But that's a bit down because it was at around 40 maybe a couple of weeks ago when I think the Plazm one was made. So yeah, obviously that's going to have an impact. So there is a bit of a drop off, but I don't think it's anything to be worried about. We've always been in this bear market, and it does seem to have sort of found itself at this sort of floor price. I think the lowest we saw Ethereum go was $1,500, but it didn't stick there for particularly long, and now it is it's at 16. Well, basically 1670. So that's quite a big up from 1500, or it wasn't ever as low as 1500, but like 1530, I think. But that's the lowest I saw it anyway. If there was anything lower than that, then I couldn't say for sure. And I think if we do a bit of a zoom out, we should get to see here on the charts what the lowest one was. So yeah, it looks like the very lowest we might have seen was 1480. Now that's not what I've seen, but yeah, so since that last video I've made, which I said, I think when I made the video we were up around here, so it was still a bit down from what it had been, but obviously that's still, we're still looking at over 1800, and potentially it might have even been over 1900 when I made the video. So it is a bit down since we last, I guess, caught up. But yeah, so there has been this downturn, but I think what's more positive to see is, yes, we had this downwards trend, but since that big spike down, which went, I think, as low as 1500, looking at the run lowest there, we have been seeing a general upwards trend, bit of a sideways trend now, but crucially, it sort of seems like we're settling at like a floor price. So I don't expect it to go down too much more than what it's already at. Or at all, really. It sort of seems like it's sort of stabilizing at this price. So again, that can happen in a bear market. I personally still believe in the bull run, so I believe that Ethereum will, more than double on where it is now, up to $4,000. I think that's a relatively conservative estimate. Some people are calling 6,000 or 8,000. So yeah, with all of our projects being tied into Ethereum, just imagine on what the returns could be if Ethereum does go up to $8,000. Even 4,000 would be really good returns, but 8,000 would be huge. Again, obviously not financial advice, just my opinion. But yeah, I think it's just important to touch upon that general market index context that we've been sort of what's been going on, which will explain a bit about when we touch upon the bonds, what's been going on with them. So at the moment, what I'm actually showing you guys is my second wallet. I have two basically because I split my assets across two wallets. I don't like to have all of it on one, just because, and if you don't have to do this, one wallet might be perfectly fine for you, but just for my peace of mind, I like to have it split across the two. So if something was to happen to one wallet for whatever reason, I lost access to it, that wouldn't be my entire portfolio essentially. So it's not quite evenly split. This wallet, which I'll switch to, here we go. So this one is my main wallet, and this is involved in more projects. The other one's newer, and I'm getting involved in basically newer projects. But the bonds being my most significant investment, I have been also putting some bonds onto that one too. So that total amount is more paralleled across the two. It's not there yet, but that's what I'm hoping to get it to. Anyway, that was just to explain on that, and that'll be good for context in a little bit when I talk about P&L. But yeah, so what you might notice is certainly since the last time I touched upon bonds, the price of the bond is down. We're currently sat at around $25, and the ETH ratio is at 0.0152. So the ETH ratio is a little bit down in the last video, which is probably the most significant change because the dollar value mapped to ETH, that's absolutely fine. If ETH goes down, of course, the value of the bond goes down. It is inevitable. But equally, on that same opposite side, if Ethereum goes up to 4,000, which is more than double, then the price of the bonds will more than double because they are mapped a bit. So you are exposed to that sort of the downside if the price of Ethereum depreciates, but you're also massively exposed to that upside if it does. And quite crucially, I think we're probably much closer to a floor price for Ethereum than we are that upside. So if you were to get involved now, could the price of bonds go down? I suppose a little bit. It could happen. There's no guarantees, obviously. But I think the return on investment on that could be quite big. Particularly because, and this touches upon how the ETH ratio works as well, if Ethereum doubles or triples from what it is just now, then all the altcoins which the bonds are invested into, they aren't just going to double or triple. They're going to go much higher than that. Because if ETH doubles, and you could see an altcoin do a 5x even. All utility coins as well, by the way, not just like random ones which you wouldn't want to be a part of. The bonds only use ones that have a good utility. And I think you just saw me close some other protocols at the top. I will get onto them in another video, but I don't want to get it too confusing by mentioning them now before I've done a tutorial sort of style thing on them. But I will be touching upon them soon. So I guess a little nice sneak peek for the next ones that will be coming up. But yeah, so that's why the ETH ratio can vary, because when Ethereum goes down in price, then the bonds are mapped to ETH, but they could go down a bit more proportionately than ETH will because of those altcoins going down a bit more than Ethereum. It doesn't happen every time, but it could. But equally, we get the other upside where if Ethereum goes up by 2 times or 3 times, then the altcoins could be going up by 5 times or 6 times, and therefore the bonds wouldn't just map that increase in Ethereum. So it wouldn't just, if Ethereum doubles, it won't just double, it could triple the value of the bonds. So if we saw $8,000 Ethereum, for instance, I think we could quite easily see a $300-400 bond. I think it could happen. When the bonds were released, I think it was $3,500 ETH. They were worth, I think, around 200 and something dollars. So obviously there's no guarantee, but it could happen, and certainly we'd see a upturn in value, but compared to this $25 now, But most crucially with the bonds is you are obviously earning yield as well. In the time I've been in, which is from November, I've earned $158. So yes, I could have held ETH and just kept hold of it and done nothing with it. But I would be worse off now because obviously I've earned yield in that meantime. So what the bonds are is a good way of, I guess, you're always going to earn a return. So you're going to be better off than just holding Ethereum. So if I just held the equivalent of, well, the total I've put in is 1,000, but I've done some DCA, which I'll touch upon in a sec. But yeah, so crucially, obviously that yield that's constantly earning, which it always is, currently at 49% APR. Yeah, that's obviously going to make a difference to your overall portfolio worth, particularly in the bonds. But also it's just a nice way of generating a passive income, which is why I really like the bonds, and they are my, we'll say, second favorite protocol behind Plazm. Those that have watched a Plazm video will know. But yeah, so that's been, obviously, that's sort of the goings on. The UI update, obviously I touched upon in a previous video. Really liking that change. I think that's really, really good. But as you can see currently, yes, P&L is very down, so 40% down. But that's because I invested in before the bear market, unfortunately, and a decent chunk of my bonds were bought before that. Since then, I've bought bonds at lower prices. So what that is called DCAing. So basically, that means that so let's say you bought a bond at $50, and then the bonds dropped to $25. So you bought one bond at 50 and then one bond at 25. Now, if you just keep that, and obviously to then get that break-even point, not accounting for the yield, just the value, to hit that break-even point, you'd need the bonds to go back to their original value of $50. But if you wait for, or if you buy a bond at $25, so you've got one at 25 and one at $50 worth, obviously they're worth literally both 25, but in terms of what you've invested in, then you only need to wait for the price to go up to $37.50 to be that break-even point. So that's what I've done. So I didn't buy all of the bonds, for example. I think it was $70 when I first started in. I didn't get all of them at that full price. There's been some DCAing here, but also really more prominent on my second wallet. But also with the P&L, obviously you've got to take into account this total profit. So yes, this $480 current value of my bond portfolio compared to the 1,000 is quite a bit less. Again, understandable in a bear market, to be expected, to be honest. But obviously, yeah, in counting for that total profit, it isn't as down as it would otherwise be. So that's how down I would be if there was no yield involved. But there is, so, and it's good. And that yield's helped me invest in other projects like Plazm. So I think that's really quite bullish. But yeah, I guess, and one other thing I guess to touch upon is daily profit. So along with this decrease in value of Ethereum, we've also seen a daily profit decrease. At one point, we were having, if you combine the two together, we were, I think, even having, $8,000 days. We had a lot of $6,000 days where that was sort of stabling across. And we are a bit down at the moment at about, 2.6 currently, $2,600 a day, which is a drop off. So it is likely, if this was to maintain and we don't see an upturn again in daily profit and daily compound, then the APR probably would go down a bit again. But in a bear market, 49% is amazing in a bear market. So even if it does go down to 20%, that's still far better than any savings account I'm in. So yeah, I'm still feeling bullish, feeling quite happy about it all, and liking that constant steady yield that I'm getting. And I can see, based on my referrals as well, that we've had a couple more people come into the bonds, which is great to see. Obviously, I do get a small bonus from that. So in total, I've earned just shy of $10. So yeah, I appreciate those that did invest in using my referral link. Obviously, you don't need to, but if anyone does want to get involved, it will always be appreciated. But as much as anything, I just quite like to see how many more get involved in the bonds, because I think they're great, and I think it's something that I would always encourage people to be invested in if they want to. Obviously, always do your own research. Only do it if it's right for you and it's sensible. It's money that you could afford to lose potentially. But obviously I'm in it and I think it's a good investment. So it's really interesting to see when people get in. For those that have, welcome. And if anyone else is interested, then if it's right for you, I hope you get involved. I've included Telegram groups, or will include them in the description as well, so you can see others that are invested too, from the main people, so EMP Money and DexFi. But yeah, I think that should be really good. And then just, I guess, to touch upon that DCAing I mentioned. So now I've switched to that second wallet I mentioned. So if you have a look here, this is my secondary wallet. My other one is my main wallet. So here the P&L is much lower. The P&L is much better. There's a much less decrease. That's the word I'm looking for. Because I've got in at lower prices. So I've got 24 bonds, which is currently worth about $600. But crucially, I've only had to spend $779. So of that original investment, only about $170 down at this decreased price, which has come along, which, that's really quite bullish. And obviously in that time, I've earned $41.25 to counter it. So only $131 down compared to what I had been at, which is about a 16.85 negative. But crucially, because I've been buying bonds at these low prices, as I mentioned again, when the price goes different, and on this wallet in particular, I think the most expensive bond was about $35. So if the bonds hit 35, I'd be breaking even on a lot of those bonds. But on the ones that cost 25 or even 30, that's a significant return on investment, forgetting the yield, which obviously is already giving me a return on my investment, but just in terms of that overall value. So yeah, that's really bullish. I think in total I have 43 bonds now, which is a number I'm pretty happy with. My goal by the end of the year is to hopefully have 100. So if the prices stay lower, one positive would be that it would make that a lot easier for me. And ultimately, the goal for me is to position myself well for the next bull run. So that will be about, acclimatizing as many of these assets. Acclimatizing is not the right word. But like getting as many of these assets as I can when they're at lower prices, and you see the returns more later. But yeah, anyway, that's everything on the bonds. Probably been a bit longer than I intended to do now, but I just enjoy telling you guys about it. So hopefully it's been educational. I guess for anyone that hasn't seen it, I will, like I said, I'll put the link to that video now, which is a full breakdown. But what I'll also quickly do is a little bit of a snapshot. Is just go over to DeBank. So to explain, the bonds are ETH on base. That's all it takes. So all you need to do is click how many bonds you want to mint. You can mint your bond, go through and approve it through your wallet, and it's as easy as that. And then once you're invested, you can then claim your USDC, which is the rewards here. And it'll take like maybe a cent in gas and ETH on base. So effectively, yeah, you get $1.51. Obviously, if you've got more bonds than me, you could earn a lot more than that. I think that's in, it will tell you what that will expect that to be in. So for 24 bonds at $1.92 a day, then you'd expect that to be, what's that, about a day and a half worth, just over maybe just a day and 2/3 worth of earnings. So nothing crazy, but steady earnings, which are good to see. But yeah, so it's ETH on base. You mint your bonds, and it's just as simple as that. The one caveat to remember is that there's no limit on the claiming. You could leave it. You could claim it as regularly as you want. You could do it every 10 seconds, every 10 minutes if you really want. Could do 10 seconds, but it takes longer than that to approve. Or you could leave it and then pick it up again in like 6 months and go, oh, there's USDC. Obviously, what you could do if you claim more regularly is compound the earnings back into bonds. That's partly what I've done, although I've often used it in other projects too. But, entirely up to you guys how you prefer to do that. But no, the one thing I was going to caveat is if you wanted to redeem your bonds, you absolutely can. Your money's not held. Once you redeem, so what you would do is select how many you want to unstake. So you click unstake, you'd select the number you want to unstake, then approve it. Then at that point, you'll be able to redeem your bonds. I've not got any that I could redeem at the moment, so they're not showing up. But if you did have some, you could click it and then redeem it. And you can absolutely get it back. It'll take 48 hours. 48 working hours. So if you did it today on a Friday, which is when I'm recording this, you wouldn't get it until Monday, maybe Tuesday, probably Tuesday, I think, for that 48 hours. But you'd absolutely get it back. However, one thing to note is there is a 10% tax, I guess you'd call it, for leaving the bonds. So if you bought a bond, does it actually tell you what it would be if you were to redeem? Let's see. Actually, I think it does. No, because I haven't got enough. But I mean, I guess this kind of gives you the indication. So at the moment, the bonds are worth 0.0151 ETH. If you were to redeem it, it would then be worth 0.0136. But basically, obviously, 10% is about $2. That's $2.50. So if you bought a $25 bond and then decided, actually, I don't want to be in it, I want to get out, or you needed to get your money out for whatever reason, you absolutely could, but there'd be a 10% tax. So effectively, you'd be getting $22.50 back, just over about around that. So obviously, if you have bigger amounts in there, then you would see that more, but your money's not held. Crucially, you can get it out, but because of that tax, it does make sense to be, if you want to get involved in the bonds, you probably need to be thinking like a mid to long-term investor, basically allowing for long enough that your yield, so this APR and what your earnings are, is enough to cover whatever you would lose in that 10% tax. So you probably want to be in it for at least 3 months, or be willing to leave it in for at least 3 months. Obviously, you can always change your mind and take it out, take a bit of a small loss if you wanted to. But it's probably more of a mid to long term. It's not something you could, like, some people will go, oh, it's gone down in price, quickly trade, quickly buy more, and then as it goes up, quickly dump it. You can't do that. That's why the 10% fee exists, or 10% tax, sorry. And crucially to explain, that 10% tax isn't given to the founders or anything. It actually just stays in the overall fund portfolio. So that's really cool. Basically, if people leave, you actually get slightly more worth of bond for your money without having to buy more. So if people leave, it's not actually a bad thing for you if you stay invested in, obviously. And then this to explain, so this button, which I got by clicking up here, this is the full transparent wallet, essentially. So it's fully doxed. You can see every single transaction that's happened. So you can see. Okay, cool. I think we're back. Sorry about that, guys. My video stopped recording, so I've just had to restart the recording now. So I was just talking about, I believe, how to get to this DeBank thing and what is so, I guess, crucial about it, or what's so good about it. So if you click on this button here, view on verified DeBank, you click that, then it takes you to the fully doxed wallet here. And you can see everything that's going on in the protocol. So you could go see when people are minting bonds. If you go far enough down, you can see the yield being distributed out, the different moving of different funds between the vaults. And also you can see everything that we're invested in. So you can see, obviously, we've got this much currently just sat in the wallet. And then you can see all of this here, which is the different vaults we're invested in. I could keep talking about this, but I do have another video on that, so I will refer you to that if you're interested. But for now, I'm going to move on to Plazm. There has been some developments on Plazm since we last spoke. So essentially, this is the Plazm protocol here. Let me just do a bit of a, oh, that's the Plazm documents. Let me just do a refresh there so you can see. And let me switch to the right wallet. There we go. So this is the one that I use to invest my Plazm into. So there has been developments in Plazm, which have been, I guess you could say, quite bullish, really, in terms of how things are going. So developments wise, I mean, so last Plazm video, I think I had 1,700 Plazm. I've now, and bear in mind the epoch's still going for today, I've earned 1,000 Plazm since that last video, which I think is really good. I'm really chuffed with that. I think that's really quite bullish, and that is really working quite well. And the price is pretty at a really good level. It's stabilized around this $2.20. $2? No, it's not $2. 2 cents. Yeah, just 2.2 cents. There we go. Sorry, it's at that price quite nicely. which is good in terms of looking at my return on investment. If you have a look, currently my investment is worth $102.50, and it has cost me $157.84 to stake. Now I have done previous stakes back along to generate this initial starting Plazm that I've got invested in. So actually it has cost me a bit more than that. So I guess this is where I will caveat. Investing in Plazm is probably a multi-cycle approach. You probably need to be in it for at least 2 to 3 of these 77-day cycles if you want to be profitable, unless the price suddenly goes up. The reason that overall it would be profitable right now is because when we started with Plazm, the price was much higher. It was before the bear market, as it's all outlined in the previous Plazm video, so I won't go into too much detail of that. But crucially, for this current set of stakes, and bear in mind this is the shortest one, and that's got like maybe like 28 days left still, and it's already at that profit. So now it's just going to go further and further into profit, which is really, really bullish. And that's just at the current price. So yeah, as you can see, yep, some of these are a bit more, but you know, ultimately that profit is going to go up. So these profits are all going to go. We've seen it with this one. This one started at the minus 75%, I think it was, at the starting point, but it's already in the 3% positive. This one's nearly in the positive. These aren't far behind. That one's closer again. So you can see the stakes are doing well, and they've all got, well, most of them have got minimum 30 days. I think that bottom one's got maybe 20 something. But yeah, that's really quite bullish, I think. That already the ROI is only negative 35% when we've got some of these which are really dragging it down. And these all have a long time. These are like 40 days under some of these big ones. The biggest ones being here. So these right now, this 800 and something Plazm there is, these are in minus 50% because these are much newer investments. They were done at the start of, or the end of May, start of June. Whereas the other ones were from a month before. So they are actually dragging this down. So come the time that they're in the same time of their stake, I think I'll definitely be in profit, because right now they are a large part of the reason. Like, that 800 was a bigger cost. So if you took that out, we probably would be nearly in profit. And once they're, that much time down the line, we definitely will be nearly there. And that's just the current prices. So I do explain it more in my video, but basically the goal of Plazm at the moment is basically just accumulation. So with how the protocol works, it's got a buy and burn function which buys the tokens, and they essentially increase. Because there's that constant buying pressure, it increases the value. So yeah, obviously you want to acclimatize. I've done it again. You want to just get hold of much better as you can, ideally for as cheap as you can. And then as the price goes up, your returns will be higher and higher. So I think if it goes to like 4-cent Plazm, I am massively in profit, including those that start off at higher prices. So, and that's only just got to go to double, which is not that far away when you look at the, there's basically a daily release pool, and there's the buy and burn. The buy and burn is built on DexFi bonds. So yield obviously fluctuates with DexFi bonds, but the buy and burn buys these tokens off the market, and the daily release pool gradually over time is getting less and less. That's the rewards you get for taking a part in the earning, like staking, etc. That's how you get your Plazm, basically. But as this release pool gets less and less, and as we hit a bull run, definitely that yield will go massively up on the bonds. You would think. We'll hit a convergence where the Plazm protocol is able to buy more Plazm than is being released, and then the price is going to soar by the time we get to that point. I think the price will go up significantly before we actually reach that convergence, but when we get there, that's when it gets really quite exciting. And I know that the founders saying maybe by the end of the year we could see $1 Plazm, which is obviously, that's a huge return right now. I set my expectations a bit more tempered, but I think if in I certainly think by the end of the year we could be seeing 10 to 20 cent Plazm. Just, obviously bull run slightly dependent, but if we hit a bull run, it could probably be higher than that. So it all just depends a little bit. Obviously, again, it's not financial advice, it's just my opinion and based on my understanding of how it all works. But it is really quite interesting. And I know with the Telegram groups which I've linked, which are for the protocols, there are other videos obviously you can look at there if you wanted to. You don't just have to take my word for it. But yeah, I think that makes it really quite bullish. And essentially, I wouldn't be looking to sell my Plazm until we're at 50-cent Plazm, probably dollar Plazm really. But if we get to dollar Plazm, then this $150 this has cost me, even if let's just say it didn't earn me any more, that would be $150 into 2,690, and it's going to earn me a lot more than that. I don't know what general APR is on 1,860 Plazm. If we had a look, yeah, that would literally be, according to that, you'd get 12,500 Plazm at the end as an estimate. So yeah, that'd be quite a return. I don't know that it will hit $1 by the end of the year. I just can't tell you what if even if it does. The economics all suggest it should. As I said, I'll include it in the video of how that buy and burn works and everything. That link to that main Plazm video is in the description, so please do check it out if you're interested in Plazm. This video was more just solely just a bit of a check-in and see how things are getting on. Because it would take too long to explain it all again. But yeah, no. So I think, economically speaking, the price of Plazm is guaranteed to go up. Again, not financial advice, but just based on the economics of how it works and how eventually the release of the rewards will just be less than the total buying from the buy and burn, which is earning yield from DexFi bonds. So as long as the Plazm protocol keeps earning yield from the bonds, which as long as the bonds keep printing, it would be basically guaranteed to do. Crypto would have to stop for the bonds pretty much to stop making any yield at all. So eventually it will go up in price. It's kind of just how long it takes to get there. But I think it's really exciting, and this is why it's my favorite protocol. It is really, really clever. So yeah, and then as I said, this is how you would earn it. So you would basically stake your Plazm, and it would then take a deposit fee in ETH. I guess just to quickly explain, so if I stake 20 Plazm, it would cost me $1.47 worth of ETH, and it's predicting right now it would return me 134 Plazm, which is worth $3. So one caveat, that your 20 Plazm is included in the 134, which is why it's an 81% ROI and not 100%, because I used to be a bit confused by that, because you're like, oh, well, that's doubled, but it does include your original spending. So obviously it's not quite as much of that, but you'd still be on 20 Plazm getting an additional 110, 114 actually, based on that calculation. And well, money wise, you'd be getting $2.50 because take off the 45, so basically an extra $1 worth of Plazm. Now, if you scale that up to 200 Plazm, for instance, then you can see it goes more. If you scale up to 2,000 Plazm, then you get the picture. It is a really clever protocol, and I think it is fascinating. So I will include that just to show the buy and burn. You know what? I'll just quickly show it. So that's the total value of the buy and burn. That's the portfolio basically in DexFi bonds. It uses the yield to buy. Well, there's a few things with it. It partly, most of it will go into, and I don't remember the exact figures on my head, so again, previous video, but most of it will go into buying a token and sending it to a dead wallet and basically burning it. So that token is completely gone and can never be accessed. Already, the protocol has burned, where are we at? Here it is, 22%. That's going up, by the way. I think that was either 20 or 21 in my Plazm video. So that's going up. That's really bullish, because that means the yield is proportionately outperforming. You see where I'm going with that? I think that's really, really cool. Obviously, this is the active supply, not the total, but still, 4.35 million Plazm burnt, which is 22% of the current active supply. So proof that it's definitely working. But yeah, so most of it will go to buying and burning. Some will go to buy and build, which is where it will buy Plazm to put in liquidity pools. Essentially, so individuals can get more Plazm. They can swap with Plazm to get Plazm if they want it, or equally they could, sell the Plazm there if they wanted. So we need to have those liquidity pairs in existence too. So part of it's that I think it's 20% into the buy and build, which is the liquidity building. The buy and burn, I think, is 60%. Yeah, ignore those values. They're not correct. They just haven't updated the UI side of it, but they've done a video where they explain it. And then the reinvested side, which this is where it uses the yield to buy more bonds, it's 20%. So at the moment, at current APR, we're compounding $106, which gets you roughly 4 bonds a day. Obviously, some days that'll be 5 when it builds up to that next. But 4 bonds a day. So actually, each day the protocol's going to be earning. So the yield will be decided weekly based on the profit that the bonds have generated in a week, and then you get paid the next week. But each day of that week after that changes, the protocol's actually earning that bit more because there's that many more bonds that it has, and that's what's really bullish. So we don't need any new investors. That's what obviously the deposit that you'll pay the deposit fee of ETH when you stake your Plazm. Yes, that goes to the buy and burn, and that's how it was built up to 400,000. But we don't need any new users in because it's already compounding and reinvesting. So if Ethereum doubled, then the value of the portfolio that's earning yield could be conservatively 100,000 if we just said that it doubled. But based on, as I explained about the bonds, you could easily see $1 million to $1 million value right now, which is really significant. But yeah, hopefully that's like a nice little snapshot just into how everything's working, and just I guess showing you how mining's performing and everything, which I think was quite important. I think it's nice that you guys get to see that. But yeah, and just general market insights. Like I said, yes, the market's struggling, but Plazm's not. Plazm's doing quite well. If we go to the chart here, where are we at? So it's quite zoomed out. So yeah, and it has been a bit of some drop-offs at points, but generally we're quite stable at the current price. I think there was some sales, but ultimately since where are we at? So that would be 2nd of June. So that's since the last Plazm video. I think the last Plazm video was around this point, so we're at around 2 cents worth there. We've had an up of all the way to 3 cents, and then people were like, oh, more money, and then sold. And that brought us down to around 2 cents. So that will happen a bit, is people that aren't so long-term minded investors will, or maybe people that just need to get out. In all fairness, sometimes people just do need to get out, or think they want to use the money elsewhere. But that will happen. As the price goes up, you will see some people selling out, which will obviously mean that then the price will drop a little bit, but it will then gradually build up, and eventually you'll just be left with people that are waiting for the long run. And the bigger and more powerful the buy and burn gets, then the longer, then people could be selling like $100, $200 a day, and it's fine because the buy and burn itself is covering it. So that's a bullish thing. But yeah, generally the price has been very stable. There was a brief drop because the Plazm partner eShare went down in value quite a lot. That's the one that's mentioned here. There was basically a really big sale on it, where someone just presumably sold all they had of the asset. Perhaps they needed to get out. Who knows? But that can obviously affect the token. But back up to $6 now, and Plazm is now back up to right nicely where it was, around 2.2 cents, which has been fairly stable in for the last few days. So yeah, I think going well. The buy and burn is clearly doing its job. There's more buys going on than sells, which is crucial. But yeah, again, hopefully this has been quite helpful. It's just more of a bit of a fun one rather than super technical this time. Gives me, to talk about general market insights and how the protocols performed during it, and just how my investments are doing as well. There will be some more videos to follow in the not too distant future, probably more so on other protocols I'm in, and also maybe just some general crypto ones. But for the time being, hopefully this has been quite interesting as like a check-in to show that actually I haven't just made one video. I am actually invested in it, because you've seen, days/weeks later that I still am. So yeah, hopefully I think that's important to, for me to be fully transparent, which is what I'm trying to do, as much as the protocols are being fully transparent as well. So yeah, hopefully it's been really interesting, or at least informative. I've enjoyed doing it, and I look forward to seeing you in the next video, and I hope you have a lovely rest of your day.